Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about entries, heavily requested video. So here it is for you guys. I'll be going over a specific technique that utilizes 2 time frames. I'll be going into detail about the theory, then we'll take a look at some examples, including a trade which I hopped into today using this exact same technique. So yeah, guys, if you are enjoying the content on the channel, please be sure to drop a like and subscribe. Without further ado, guys, let's get straight into the video. Okay guys, so welcome to the tutorial. So as you can see, we've got a diagram on our screen. I'll run through the theory of what we're looking for in the market, and then we're going to take a look at some examples shortly after. So we're utilizing 2 time frames here. You want to make sure the time frames you're using are fairly close together. If you're using like MT4 or TradingView, you want to make sure you're using time frames which are close together, which basically means like H4 and H1 in the 15 minute and 5 minute, daily in H4. So you want to make sure using your higher time frame and your lower time frame is within touching distance together. So for these examples, I'm using H4 and H1, but they work across many different time frames. You can go and test it for yourself. So as you can see, this is the H4 on the left, this is the H1. Basically what we're looking for is for wicks and momentum. Our entry trigger will be momentum, which is going to be a bullish engulfing most of the time on the lower time frames, aka the hourly for this one. And on the H4, what we're going to be seeing is wicks rejection. We're going to be seeing the market placing a lot of wicks into our key area. So on the left here, you can see this is the H4. These are our H4 candles. This is the zone we're looking to buy from. Again, as to which zone we're looking to buy from, the location, the confluences, it is very important. This doesn't work just anywhere you want it to. It needs to be on precise areas that fit your plan, fit your strategy, and has good confluences. So if you're looking for confluences, feel free to check out another video. I do have a video on that. But this is a level that we're supposedly looking at, which has got good confluence, which you're looking to buy from. So here in the H4, you can see the market starting to print all these wicks here to the downside. This is a very high probability sign that the market is looking to reverse from here. How far it goes, that's a different question. That comes with your trading style, but we're most likely going to see a bounce from this area. And when we're looking at the H4, you're not necessarily looking for bullish engulfings here, because say if you look for bullish engulfing, if you copy and paste this there, our entry will be up here, something like this. So our risk reward will not be as favorable. So we can utilize the lower time frames here and look for momentum on the lower time frames and get into the trade earlier. So the key things we're looking for is wicks and momentum on the lower time frame, wicks on the higher time frame. So if this was the daily chart, you want to be seeing wicks into your level on the daily chart, then drop to your H4 for your engulfing or your entry candle. But again, you want to see momentum, so most of the time it will be an engulfing candle. If this was the H1 or the 15 minute, you want to drop to your lower time frames there and look for momentum. So the key thing we're looking for is wicks through the level, not wicks directly into the level. You want wicks that spike through. So as you can see, the wicks spike through the level here. It doesn't have to be every single one, but you just want to see some exaggeration with the wicks, inability for the market to break through and it pulls back and closes above the level. That's the key thing you want to be utilizing. You don't want to see a wick that forms like this, which just about test the level. So let's see if we just copy and paste this. So say that candles coming into the level and just about wicks and test the level and pulls back up. Those, in my experience, don't work as well as wicks that pierce through the level and pull back up. These, yes, they might work sometimes, but these are the ones that really do well. So this is what you want to be looking for: wicks through the level, not testing. Slightly into level is better, but you want to see stuff like this. And again, it doesn't have to be every single wick. As you can see, this wick doesn't spike completely through, this one doesn't. These two just about do it. So you just want to see 1 or 2 spikes through the level, or at least into it, and then that will be what we consider good probability with our wick rejections. And then we can simply drop to the low time frames and utilize the momentum in the low time frames for our entry trigger, rather than using the same H4 to maximize that risk to reward. So instead of entering maybe up here from the bullish engulfing, maybe our entry is down here somewhere, maybe even smaller, with the stop loss underneath there, probably giving us an extra 1 hour on our risk to reward, utilizing the hourly time frame. And typically your bullish engulfings, your bearish engulfings are going to look something like this. Again, in terms of wicks on the hourly time frame is not important. These candles don't necessarily have to be giving us good wick rejections. If they do, it's an added bonus. but you want to see your wicks on the higher time frame. That's the key thing you want to be looking at. If you don't get, two big wick rejections on the lower time frame, that's not important. What you want to be seeing on these time frames is the bullish engulfing, or the bearish engulfing if you're looking for sells, which displays momentum in the market. So the momentum's the trigger. So when the buyers are looking to step in or the sellers are looking to step in, that's the trigger we get into the market with them as well. And we've got the higher time frame showing the inability to go higher or the inability to go lower with these wicks through the level. So combining them gives you very, very powerful entry candles and entry signals, combining with the confluences and the reason why you're looking to get in at a particular location. So hopefully that's understood. Again, it's not too complicated, but two key things to be looking out for: higher time frame wicks, lower time frame momentum. Let's jump into examples and we'll go through that. Okay, right guys, so we're gonna go through 3 examples, one on gold, one on USDJPY, and one on NZDJPY, which is the current trade I'm in. And of course, you guys can go back test and take a look at a lot more and go through different time frames as well in your own time. But yeah, gold, this was a really nice push to the upside we had this week, which is actually an opportunity I was looking to get involved myself. Didn't manage to get into the trade because it happened outside of my trading hours. But in terms of the setup, the technicals, all kind of fitted up very, very well. So as you can see here, this is the H4 time frame. So this is our area of confluence. We've got a good fib confluence here. We're coming closer to the trend line and also retesting really nice structure on the left, turn resistance, turn support. So this is our area of confluence where we're looking to go long, anticipate more upside. Obviously, we've got bullish structure there as well. We're looking for the next swing. So the plan for gold coming into the week was looking for the retest of this area and then looking for the continuation to the upside, which of course, as you can see, we did get. And this was our area of confluence where we're going to look to study the price action and possibly look for entries. Now, you can see here on the 4H time frame, we came into this area, really nice wick through the level. This is a very, very good sign that the market is most likely going to bounce. It may just be a small bounce sometimes, and then the market rolls over. Let me change the color of that. So it might just be a small bounce and the market rolls over. It may actually start flying. Of course, that's where you look to manage your trade and manage your trade, take profits or trail stops. That will be up to your trading strategy. But this is a good entry signal that the market is looking to bounce and reverse and shift the momentum from obviously bearish here to bullish and vice versa. So this was a good signal. And then as you can see, the wicks didn't really follow through on the other wicks, but that's not important. We just want to see at least one good wick through that level. And we got that in the 4H there, closing the dojis, a few more wicks to the downside, which is just added bonus. So then we can drop to the lower time frames and look for our momentum candle, which happened to be this candle here. Really nice momentum to the upside there. All these candles here, you potentially could look to enter them, but they don't really display much momentum. The market could still look to roll over. These are good entry candles, as you can see. After that kind of fake lower, nice entry candle there with good momentum, and after that the market continued to go higher. So that there was your entry candle, stop loss below the zone, which is that wick there, and then you can take advantage of that move to the upside or however you're looking to manage that trade. But this is a very, very powerful entry technique utilizing 2 time frames, so you're not just stuck using one. You can see what's happening on the higher time frame, see evidence that the market wants to turn on the higher time frame, and obviously utilize your low time frames to maximize your risk reward and look for your momentum, which will be your entry trigger. So that is what things are looking like for gold. We'll go take a look at USDJPY next and NZDJPY. Okay, so on to USDJPY. So USDJPY is actually rocketing to the upside right now. And again, this was off the same exact entry technique which I was talking about in this video. It was actually a trade opportunity I was looking to get into myself, but instead I was shorting NZDJPY, so I didn't want to buy USDJPY and short NZDJPY, which kind of contradicts itself. So I'm trading NZDJPY right now. But as you can see, USDJPY flying to the upside, and again, the exact same entry technique. You can see prices coming to a good area of value, key support level here, obviously coming to the trend line there as well. And we had some really nice fib confluence into the 50 or the 6.18, into that 50% there with those rejections. So if I take this away, you can see, look at the wicks we're getting into this level. This is another key sign that the market is most likely looking to reverse, at least have a bounce to the upside. So when you get 1, 2, 3, 4, 5 wicks, these are all signs that the market is getting ready to turn. And this is a good sign in the higher time frame, which is the 4H. This could be the daily, could be the hourly, could be the 15, wherever you designate as your higher time frame. You want to be seeing the wicks, and then you can drop to the low time frames to see momentum and your bullish engulfing. which occurred here. Nice bullish engulfing, stop loss below the zone, and then again take your trade, wherever you want to push it into. And again, you can see how this maximizes your risk reward. Gold trade, which I just showed you before, didn't really maximize the risk rewards. Sometimes the risk reward will be similar to the 4H, sometimes it will be a lot different. In this case scenario, you can see you got your entry there utilizing the bullish engulfing on the hourly chart, and look at the entry, it's right there with the wicks. Whereas if you waited for the 4H time frame, you'd be entering up there, which again really does lower the risk reward by quite a lot there. So utilizing the hourly time frame for the momentum, that's your entry trigger, and then obviously looking for the wicks, which is a sign that okay, we're getting ready to reverse. So this is a really nice entry pattern. Again, the trade's playing out very, very well, but I prefer the NZDJPY, so I didn't get into the position. I'll take a look at NZDJPY right now, which, as you can see, this is the trade I'm currently in. And again, people could say, well, why didn't I take both positions? But like I said, it contradicts itself. Most of the time, you're not going to see NZDJPY falling and USDJPY rising. Most of the time, one will be, they'll both be going up or both be going down, maybe at slower paces. But yeah, they're kind of both kind of playing out quite nicely. But this is the trade I'm actually in here, and again, it's the exact same pattern coming into a very nice place of resistance here. As you can see, really nice resistance previously. Again, multiple wicks. Again, you can use the same entry technique in this area here as well with those wicks. Drop to low time frames, look for the bearish engulfing, take the trade. But I took the trade here. You can see really nice wick into that level there. We also had a high time frame trend line on the daily chart here as well, connecting the price. So that's what another confluence was to get into the trade. And then I looked for the shift in momentum on the low time frames, which was this nice bearish engulfing. I could have gotten here, but I didn't because it was outside of my trading hours. This happened 8 o'clock last night. I'm not looking at the charts at that time. Momentum is typically quite low until we pick up again for the aging session, which is when I'm sleeping. So this was my entry signal. Nice shift momentum down the bet on the hourly time frame. Stop loss above the high for a few extra pips with a bit of wiggle room, and then again looking for a push to the downside. And as you can see, we're starting to pick up some momentum there for NZDJPY. So we'll see how that position goes. The entry looks to be playing out, but now it's up to the trade. Is the market going to follow through to the downside? The market could just stop at some areas here and look to reverse back up again. The entry's done its job. Now it's up to see if we can get that full swing. But it's the same entry technique for NZDJPY, USDJPY as well there, and for gold as well over here. So yeah, guys, look into this, going back test, go through the analysis, obviously test it in different time frames. Maybe you find out that different time frames work better than others, so go do your due diligence there. But yeah, guys, take what you want from this, again, incorporate into your trading, go test it out, see if it works for you. If it doesn't, obviously disregard it, move on to something else. But this is what I look at a lot, utilizing 2 time frames of wicks and momentum. So if you have enjoyed today's video, guys, please be sure to drop a like and subscribe, and also drop a comment if there's a particular video you want to see from this channel. But guys, thank you so much for watching, and I'll catch you all in the next one.